Hi, guys. Is anybody there yet?
Hi, Senator. Not yet.
Hi, guy.
We're just gonna start in a few minutes.
Okay, what is this going to be today? Is this initially going to be just a setup meeting,
No,
or
we're gonna
are we?
have the alliance, the nonprofit alliance, present.
Okay, so I can't be up there today, but I will be up there. And you know that this was one of my main issues last year, working with connections and the problems that they were having, and a number of other communities, and we addressed it for 1 year only, and we'll have a long-term problem if we don't address the issue.
Got it. Got it. Well, we're gonna meet today and then again in every 2 weeks. So
Okay, great.
Good morning, everybody. Thank you for being here. On our working group on nonprofit liability, property, casualty insurance, and really all insurance related to our nonprofits, we are going to be talking today about the challenges in this space. And we're also going to be talking today, we're going to get a presentation from the Nonprofit Alliance. And then I think we can also talk about other members that we want to join this group. And then we'll talk about deliverables for meetings going forward. This is, a lot of us are in person, but a lot of us are online, which is fine. Because this is such an emergency, it's okay if you can't meet every time. And if you meet virtually, that is fine as well and welcomed. Why don't we start with just going around the table and introducing ourselves, and then we can pass it off to the Nonprofit Alliance. My name is Carrie Wood. I am the co-chair of the Insurance and Real Estate Committee, and I represent Rocky Hill and Mothersfield. We'll go over to Katie.
I'm Katie Stargarter. I'm the Undersecretary for Legislative Affairs at the Office of Policy and Management.
There we go. Whoops.
Alex.
Okay. Good morning. I'm Mike McGlaris, principal of Michael McGlaris and Company, and superintendent of Connecticut Foundation Solutions Indemnity Company, celebrating 1,156 families returned to safe and secure foundations, thanks to the state program. So we're on our way to 1,200, boy.
Ben.
Hi, I'm Ben Shakin. I'm the Director of Public Policy and Advocacy at the Connecticut Community Nonprofit Alliance.
And I am, excuse me, I'm John Carl Casa. I'm the President and CEO of the Community Nonprofit Alliance.
Good afternoon. My name is Lisa DeMattis Lepori, CEO from The Connection. We are a statewide nonprofit. We serve populations for community justice, family support services, and behavioral health. Last year, we served 12,000 unduplicated residents in Connecticut. Thank you for inviting me today.
Good afternoon. My name is Terry Calderon. I'm an attorney with the Connecticut Insurance Department, and it's great to be here.
George Bradner, Property Casualty Director at the Connecticut Insurance Department.
PJ Cimini here as the president of the Connecticut Captive Insurance Association.
Eric George, president of the Insurance Association of Connecticut, representing the property and casualty insurers in Connecticut.
And why don't we go to online? I'll start with Representative Metzgers.
Thank you, since I was able to figure out how to unmute, thank God, from my iPhone. So Rep. Metzgers, member of the Insurance Committee and co-chair of Commerce, and obviously everything in this that affects our nonprofits and their sustainability is important to me.
Kara.
And good afternoon, everybody. I'm Kara Pavlak-D'Amato. I am a state representative I'm also the ranking member, and I represent part of Bristol.
Senator Austin.
So I think it's afternoon now. I'm Kathy Austin. I'm the state senator from the 19th district. I represent 10 towns in eastern Connecticut, and my district encompasses the tribal lands of both the two federally recognized tribal nations. I actually started working on this issue last year with the connections, and we were able to solve the problem for 1 year and 1 year only, which creates the necessity for this group. The nonprofits have a significant problem, not only in Connecticut, but nationally, for property and liability. And a lot of this has to do with the fact that we are seeing insurance be priced out and are not able to, the nonprofits cannot afford the cost of insurance, in particular for liability, when they take care of some of our most at-risk residents around the state. And I think that this is going to be a long-term problem. I think we have to do a lot of work to do. I commit the time necessary to do this. I just happen to be going to a drone presentation on one of the farms in my district, so I have to be in district right now. Apologize for not being there in person. And again, look forward to actually dealing with this issue long-term. Thank you.
Anyone else online?
I am, but just Tammy Nuccio, State Rep, 53rd District.
Hey, Matt Lesser, State Senator, member of the Insurance Committee. I'm also the chair of the Human Services Committee, where we work with a lot of the state-funded nonprofits, and very interested in this issue. The connection is actually based in my district, and we're familiar with that issue, and recognize that this is a major public policy issue that we got to wrestle with. Thank you very much.
Good afternoon, Kara Passero, Office of the Attorney General.
Good afternoon, everybody. This is Chris Liddy with Senate Democrats.
Good afternoon, Bermuda Zimmerman, Ava Bermuda Zimmerman, Child Care Coalition, Child Care for CT.
Hi, Meg Dreyer, covering insurance for Senate Republicans.
Okay, it sounds like we got everyone. Really appreciate everyone coming and joining us here. I would like to pass it over to the Nonprofit Alliance to kind of give a history of legislatively what we've been doing to try to solve this problem. I think sharing some of the stories that your members are dealing with. I personally have gone to a lot of your Alliance meetings and heard many stories. I know you guys have also done some polling. So I would appreciate you guys filling us in and giving us some background on this topic.
Thank you. I will turn it over to Ben in a minute, but I do want to thank you, Representative Wood, and other legislators for being part of this working group. It is it's not an exaggeration, really, to say that this is an existential issue for nonprofits. The state really has to decide, do we want nonprofits to continue to provide services or do we not? As I think Ben can describe, this is an aspect of cost increases for insurance that nonprofits, as Senator Austin said, not only in Connecticut, but across the country, have been dealing with. The organizations that to date have been told that they either cannot get insurance, or that in the future they will not be able to get insurance, or that they will be paying 100% more for less coverage. Those are canaries in the coal mine. And we appreciate the working group because I think it's an opportunity to sort of look ahead and try to stop this before too much damage is done. We have models that we can look at where the state has stepped forward and has been willing to help in the area of liability. Crumbling Foundations is one. I was only 8 years old, but I was at CCM when Kerma got the liability loan from the state of Connecticut in order to form a liability pool for municipalities. They had their crisis at the time. So we have some models out there. We can describe the problem for you and what we've done to date, but I do generally want to thank you for opening this discussion.
Thanks, John Carl. So we had a bill last year, which I'll go through, but I wanted to talk a little bit about kind of contextualizing the problem as we see it. We're the statewide association of community nonprofits. We have about 300 nonprofit organization members around the state. Most of the folks that we work with are the organizations that the state contracts with to provide the state's health and human services network that Senator Austin mentioned. As you all know, the state relies on nonprofits to provide the vast majority of those services to more than 500,000 Connecticut residents. These are contracts with multiple state agencies that OPM manages through the purchase of services procurement system. Altogether, if you add everything up, it's about 10% of the entire state budget. It's a pretty significant thing that the state of Connecticut invests in, just under $3 billion a year in total services being delivered. There's 120,000 people in the state, just shy of 120,000 people that work in this industry, about 8% of the workforce. It's a significant part of our economy and is significant. And as John Carl said, there's really no option for Connecticut if these services face elimination due to some kind of outside force, like not being able to get insurance for the services that they're providing. It would be functionally impossible for a variety of reasons for the state to take over even a part of the service delivery system if it were to face a crisis like not being able to operate because it couldn't be insured. So we're seeing, I think, two major things from our members. One is a majority of them are facing massive increases in their liability and property casualty insurance policies, um, and uh, and at the same time facing a reduction in the amount of coverage that they're being offered when they go out to the market to renew their policies. And then we're seeing a smaller number of providers, but what we think could be, as John Carl said, kind of canary in the coal mine providers who are facing, at least temporarily, as they go out to the market to get insurance, no company is willing to insure their books of business. And so as Representative Wood mentioned, we've done some polling of our organizations about a year ago in preparation for the last legislative session. Our members are reporting significant or larger than normal increases in insurance. It's all insurance. This isn't just a nonprofit issue. Insurance is getting more expensive. We all know this. But more than half of our members, 56%, said a larger than normal increase in property casualty. Related specifically to liability insurance, also 54% report that their carriers have requested significant increases in the cost. 20% have said their carriers have threatened to drop some or all of their programs. 9% have actually been dropped from coverage. And 43% report that their liability insurance rates increased by more than 10% in the last year. So everybody expects their insurance goes up a little bit every year, costs go up, but these are significant increases. We're seeing, I think, a concentration of the issue in a couple places. One is in child serving programs. And I saw Ava's on the call from child care centers. That's her organization represents child care centers. We don't have as many of them as our members, but we do work with all of the organizations that provide services under contract with the Department of Children and Families, and particularly in the foster care world for the organizations that are contracted to do foster care services on behalf of the department. With no claims experience whatsoever, we are seeing members sort of repeatedly having issues renewing their insurance. And I'll get into a little bit about how they're dealing with them in a second. Also, nonprofits with claims experience outside of the child industry are facing similar issues, finding it impossible or nearly impossible to get coverage. And so obviously no one wants to have claims experience, but it is a normal part of doing business. It's a normal part of doing business for organizations that are providing services to risky populations and risky services. And insurance should be able to meet those claims and still be able to, you should still be able to buy it for yourself if you've had a claim. And then we haven't heard so much of this in Connecticut, but we have been hearing nationally from some of our colleagues around the country. There have been some executive orders since January from President Trump that have put some nonprofits that do things like environmental advocacy and other areas have classified them in different ways with the IRS. Concerns about them being not nonpartisan, being partisan essentially. And in some cases, although we're not aware of them yet in Connecticut, around the country, some of our colleagues have reported to us like, oh, hey, we have a member who's an environmental advocacy organization. Their liability insurer is dropping them because they think the new executive order makes what they do illegal. And so obviously it doesn't. There have been lots of lawsuits that have shown that those things have been overturned, but that's still an issue. So I would say mostly through a variety of ways, some of them quite extreme, our organizations have been able to find coverage, but only sort of temporarily. And so in some cases, when people have been dropped, they've had to go to the excess cost marketplace, which has increased the cost, their annual cost for insurance by 10 times at least. Those are also very temporary and not sustainable. We are also seeing more broadly that umbrella policies for organizations are being eliminated or significantly reduced. So what an organization might have previously held a $10 million umbrella coverage for their whole organization, we're seeing in some cases insurers say, we'll give you an umbrella policy for everything in your organization except this program, and you're on your own for this program, or that 10 million is going to be 2 million or 1 million. And in those cases, in effect, nonprofits are sort of self-insuring their own stop loss. If there were a claim and a judgment that exceeded a small umbrella policy like $1 million, the nonprofit, of course, would be on the hook for anything above that. And that's a huge risk to the system. There's none of these organizations could pay out an amount of money in the millions of dollars over and above what their small umbrella policies would cover. And so if we get to a point where there are claims and they get to a point where there are settlements or judgments that are significant, we're going to see providers go into bankruptcy, go out of business over them. And then finally, that we're seeing that the marketplace is really significantly constrained. It's a pretty normal experience for these organizations when they go to the market every year for renewal to go out to bid to 12 or 13 companies and maybe get one company or two companies that, or in some cases zero, that decide they'll write the policy. We're happy to bring in some brokers that specialize in working with nonprofit organizations who have very recently done this for their clients, and they can sort of give some examples maybe at a later meeting. But we hear this routinely. Like, we go out to 11 or 12 different companies in the marketplace. Maybe we get one, maybe we get two. When they come in, they're really high. And so for our members, they don't have the ability to find an affordable option or to really compare anything. So legislatively, we came to this committee last year. We asked you to raise a bill, and you did. Senate Bill 1322 came out of this committee. It would have done a few things. First, it would have funded a feasibility study to be done by an actuary to determine what a solution might look like. And so John Carl mentioned a couple of different models. We know some models out there in the world, but we really don't have a sense yet from someone who could look at the entire industry and all of its programs, all of the different services that are offered, figure out what it would cost, what, if any, state investment there would need to be, what structure of the final program would make the most sense. We've mentioned captives, we've mentioned KERMA, and what role the existing commercial marketplace would continue to play if the state pursued a solution like this. As John Carl mentioned, CIFSIC is an example of the state starting and maintaining a captive insurance program for a crisis in the state. KERMA, again, created in 1986 with a loan of $8.6 million and about $25 million in today's money, still is the insurer of record for the most part for Connecticut's municipalities. And then the bill also had some other provisions, an initial draft that made it through this committee, and this was taken out in the Judiciary Committee, had a provision limiting liability for nonprofit state contractors to that which they are directly negligent for, which is how it should work legally. You should be only liable for that which you control, but everyone knows when you actually go to court, that's not how it always works. Often nonprofits and their liability insurance companies therefore end up paying large claims in cases where the state and other entities share some liability in the outcome. Texas and Pennsylvania have both passed legislation to this effect over the last couple of years. There's a provision also in state contracts, all state contracts, it's sort of boilerplate state contract language that requires the organization that signs the contract to, unless the state is wholly liable, to cover and pay for all of the state's legal fees in adjudicating any claim. And so as there have been a couple of claims recently, insurers have become aware of this provision. Some of them weren't aware of it, I think, before. And so that's an issue that I think we're interested in working on. Representative Wood, you asked, like, what are some barriers and hurdles? I think in this particular area, and who should be around this table as part of the conversation today, this is something that I think is fairly squarely in the cognizance of the Judiciary Committee. And so we're interested in pursuing it again. I think next session. There are concerns with this proposal from the Trial Lawyers Association, but I think having the Judiciary Committee be the committee that has a public hearing on this, or one of the committees that has a public hearing on this particular topic, would be helpful in moving this conversation forward, at least around the liability limitations. I'll just sort of close by saying our members are are running programs that are risky, right? Like there is risk, bad things happen sometimes in these programs. The people who are being served are often people with serious and persistent mental illness. They're often kids with serious and persistent mental illness these are not locked facilities. And generally, almost exclusively, and that what that means is that we deal with this in other committees, often the Human Services Committee, Appropriations, and others, where we hear about issues in the community related to some of these programs. And I'll just say that it's essential that they continue to be able to function and not have to sort of worry about, okay, is my insurance going to cover this, when they're asked by the state to take care of a particular type of person or someone who presents with a particular diagnosis. So I'll give one example. That we have a member whose insurance carrier told them, look, you are not allowed to serve anyone else who has a history of starting fires. And yet the state agency with whom they contract routinely asks them to take on people in their residential programs who have mental illness and have a particular history of fire starting in their lives. And so they're sort of caught in between. I have an insurance company telling me I'm going to get dropped from coverage if I do this anymore, in my state agency who says, I have a contract with you that says I need you to serve these people, and their mission is to serve these people. And so they're sort of stuck. And I'm hoping that we can use this group to figure out a solution to it. So that's what I have. I'm happy to take any questions that anyone has.
If I could just add for a second, one aspect of this to keep in mind, and that is cost. When I first worked on behalf of CCM, one of my first projects was to try to keep track of the number of people who were just in cities because they'd been deinstitutionalized by the state. They just gave them one-way tickets to Bridgeport or Hartford or New Haven, and that was it. To a large extent, the nonprofit sector grew up to deal with cases like that in a less expensive manner. The risks that Ben described are not going away. The people who pose those risks are not going away. So what is the alternative to the nonprofit system? Reinstitutionalizing folks? First of all, the Supreme Court has said that is not the optimum way to deal with people who have these needs. But secondly, the cost of reinstitutionalization would be much higher than the cost posed by helping nonprofits cope with the problem.
Before we move to questions, I was wondering if Lisa or Ava wanted to add to the, what's going on in the market.
Yes, so thank you all for having me today. And I want to thank many of you that are on the call and sitting around the table who really helped the connection with our issue this past session, which was we were notified on April 1st that our insurance company was dropping us because of a claim. Even though we had for the past 7 years paying $1.2 million for our 49 statewide programs without large claims, they dropped us. And that meant that we would go out of business. 17 insurance companies turned us down, so we had to go into the secondary market, which cost us an additional $1 million for our services. And we were going to basically close. And so we were here and, fighting this battle. Keep in mind that, we take the most riskiest populations in our programs, and we do have a long history of not having these issues occur and tragedy. We don't go into the business for things to go south or for there to be these horrific events. However, they do happen. And what happened during this issue that we were battling prior to dropping our insurance is the indemnification clause, which means, as Ben stated and John Carl, that we have to, as nonprofits, we have to take the responsibility. So for example, if you have a client that's living in the community that's on an ankle bracelet that's being monitored, and the PO does not notify us that that person perhaps was in a drug infested area, we have no idea, right? So we don't know that that's happening. So if anything goes awry, we will take responsibility for what happens. That's a massive problem because we then can't be fully responsible for what goes on. And so therefore, we're stuck in this predicament because what we do know is that nonprofits are costing the state less than if they were in a different type of institution. So long story short, we're stuck in this position where this specific insurance company told me directly, we are going to start dropping all of your peers because this specific company covers a lot of the criminal justice programs like we have, right? And they got very involved in this case, seeing case notes during the search, search process over the past year during mediation, and they were very involved in understanding about the indemnification clause that holds the state harmless. And we served 12,000 unduplicated clients last year. We've got stories, many wonderful stories that we'd be happy to share with our clients who have been, I've been with the agency for 35 years, not as a CEO, only the past 10. We're in touch with our clients. Their lives have changed. I'm not here to be a social worker. I'm here to tell you that nonprofits are making a difference in Connecticut. All of my peers are at risk right now. It's very scary. And while a solution to assist us during this past fiscal year, thank you, Senator Austin and Cleza, the Alliance, and all of you for helping us during this time, it's not going to help us moving forward. We have wait lists that are extremely long, and the population's not getting better, right? So nonprofits need to continue to exist. We are making a difference. However, our hands are being tied, and how can my peers afford this type of increase? We were already paying 1.2 million, and now it's over $2 million. So this is why exactly we were dropped, because they were very involved in, seeing case notes and understanding the history, and exactly what went on. So that's why we're in the situation we are now, and that's why we have secondary, insurance that has picked us up for this extremely high cost. But 17, everyone turned us down. No one wanted us. And a couple of my peers recently have been dropped from the same insurance company because they had a very small claim, not even close to the type of claim that we had. So they're not even looking at the history of your claims, right? I mean, we didn't have any claims, but they dropped us at the last moment, and we had to really scramble. So it was really a very, very scary time.
Thank you for sharing that with us. I want to ask Ava if you want to add any color to the situation as well.
Thank you, Representative Wood. And thank you again, Representative. And as well, shout out to Senator Cabrera for taking the time out to be on our childcare call, our weekly childcare call, where we had close to 300 childcare educators, owner operators discussing this issue and trying to explore creative ways to fix it. And all the time that this committee, the insurance committee, and I now am very excited about this working group to try to solve these issues, because what Lisa said, what Ben said, these are not new circumstances. For anyone watching this later or on now who's wondering, well, what's the impact of insurance in the nonprofit world, nonprofit organizations or childcare educators on their everyday life? We have to remember that these organizations are the backbone of our state. If an organization is not able to stay open, keep their doors open because of the lack of insurance, and like Ben said, this is not just health insurance, it's health insurance, liability insurance, a long flurry of different problems in the insurance reality, then people are forced, organizations are forced to close their doors, stop services that are so vital for the community, and then put families in despair and in dire need of those services that are no longer available because something that sounds so simple like insurance is not attainable or accessible or affordable. Just to relate some of the details that were shared with Representative Wood and Cabrera on that call with so many providers, very similar examples where the insurance prices were hiked up because there was a situation with a staffer. So then the insurance company doubled or tripled the cost of re-upping their insurance. Examples of insurance being pulled out, companies that said to educational providers and telling them, well, we've insured you for 10 years, but we found out that the liability cost in your region is just too high. We're not going to insure you anymore. Good luck. And then really scary stories where a good majority of providers saying that there's only one or two insurance options in their area that would take it on. And this situation in the childcare narrative is not just for home-based providers, it's also affecting and impacting childcare centers with the same scenario where they're shutting their doors, delaying openings because they just can't find insurance. Even though insurance in the educational field is not a requirement, the building landlords, when you're talking about the structures, a lot of times it is a requisite. So insurance is necessary. It's part of running a business, and we have to do something. So thank you again for convening this work group.
Are there any questions from the group that wants to ask anyone here?
Me at all. There we go. Sorry about that. A comment, if I may. There's a long history, and there's a long history in Connecticut of federal tax exempts, 501c3s, shouldering social, healthcare, and related burdens. Long history. And there's an equally long history of the insurance market at some point reacting negatively to the conduct of that business, where underwriters say, we don't want to do this anymore, or underwriters say, we can do it, but it's only under these conditions, or your deductible must increase, or your cost must increase. There's a long history of it. Otherwise, every single tax-exempt hospital in Connecticut wouldn't be covered by a captive insurance company. There's a reason for it. There's something else going on here, which I think is important. I'd like to add, with Representative Wood and Representative Barry's permission, into the equation, which is those captives that have been formed by tax-exempt providers of social services and healthcare services are invariably formed in partnership with the commercial insurance market, not in opposition to it. Bear that in mind. The solution, I think, that you may want to come to, and Ben alluded to some incredible data, is a working relationship with the people in the underwriting community who have said no consistently. How do we get them to say yes? And that's what captives have been doing since the first captive formed in the United States in Pawtucket, Rhode Island in 1836, which was a captive formed to work with commercial insurers, not against them. So rule nothing out is the point I'd like to make, Rep. Wood. Rule collaboration. Think about collaboration. Think about the commercial insurance and reinsurance market. Think about ways that we can appeal, that you can appeal with the tremendous trauma that you're going through with your 501c3s. How can we appeal, and I'm serious about this, I'm not making a joke, to the better angels of the commercial insurance underwriting community to work with us on a solution? Because I think we come at this from two directions. which is a certain amount of self-insurance and a certain amount of captive involvement, which I think may be a solution here. But unlike CIFSIC, unlike the Connecticut Foundation Solutions Insurance Program, where there was no possibility of collaboration because the insurance market went to the Connecticut Supreme Court and the Supreme Court ruled in favor of them denying these claims, which meant we had only one option. We turned around and got donations from 3 major property and casualty insurance companies, very important donations, to help homeowners who couldn't afford to complete these foundations. Collaboration may be the watchword of this relationship, and I would encourage everyone to consider that as a real possibility as you move forward.
Thank you, Michael. Michael's going to be presenting at our next meeting on the CIFSIC success story and on what a captive insurance company means and how that could be one solution. So I know we're saying the word captive all the time, but many people, may not know what that is, but we're going to learn all about that at the next meeting. Representative Nuccio.
Thank you, Madam Chair. I know we've had this meeting, we had it last session, and happy to be having it again and to try to find a solution here. I don't think the solution is that the state can take on the cost of this. And I know we've looked at a couple of different things, but what I'm really still looking back through my notes and what I don't have written down is, why are the insurance companies dropping them? Is this a population that has a high amount of claims? Is there anything that we can do with those claims? Like, is it employee behavior driven or car accidents or, litigious people? Like, what is the reasoning that we're seeing from the insurance companies for dropping this population?
Eric, do you want to win?
Let me
Ben?
just
I'm happy to speak after Ben.
Yeah, let me just start and say, Representative Nuccio, I don't think that, so I neglected to mention, talking about this bill, that there was, I think, hope in the waning days of the legislative session that this feasibility study would be funded in the budget, and there was conversations between this committee and the Appropriations Committee and the governor's office and OPM and the insurance department. And as the sort of chaotic end of session days came to a close, the study is not funded in the budget. And so we are still trying to figure out how we can get it done. So we don't know what the cost would be. I think we have never at the Alliance really contemplated a world in which the state is paying for this forever. Our members currently pay for liability insurance. I don't think anyone is expecting to stop paying for liability insurance. Different, however, than like the state's nonprofit hospitals that Michael mentioned just now, who have had their own individual captive programs for several decades. Our members don't have the capital that would be required to individually form their own captive insurance program or even collectively form it. And so or any insurance program, the initial capital that would be required to have an insurance, captive or otherwise, program that was funding nonprofit services, we don't know how much it would be, but it would be too much for our members to be able to take on with their own cash. The state budget just does not fund them adequately enough to do that, as you know, as your colleagues on the Appropriations Committee know. So secondly, in terms of claims experience, maybe Eric can provide a little bit more detail. I would say, as our industry is concerned, both here and around the country, we don't really know. There have been some major judgments in foster care services in other parts of the country. Los Angeles County in April was just settled a significant sexual abuse lawsuit related to its foster care system for $4 billion. That has not existed in the state of Connecticut, though. There are individual claims always here and there, but we have a number of members, particularly that provide foster care services, who have never had a claim ever, who are in this exact situation. And then we have some members like Lisa and the Connection, who have had a claim, but otherwise do everything right, like have all of their policies and procedures in place, are not systematically doing things that might cause negligence in claims, but nevertheless a bad thing happens, who are also facing the same situation. And so we've heard of various different speculation about like this law changed in this state or nationally. But we really can't point to any one thing in Connecticut or even really nationally that's causing this industry shift. It just seems to be happening as the industry, I think, takes a close look across its entire book of business about the risk that it's facing. And so just like your homeowner's insurance is going up, I think it's reacting this way to nonprofits too.
I just wanted to also piggyback off of what Ben said. At one time, the Connection did have a small foster care program. Zero claims, nothing went wrong. Our current insurance back then refused to pick that up because they felt that it was too risky of a population, and we made the decision to close that program.
Okay, that's
I was going to just say a couple words, if that's all right. In reference to your question, Representative Nucio, so thank you very much, Ben. And in terms of collaboration, let me just say that it's actually been a real pleasure to work with the Alliance and specifically you, Ben. I think that we are in the same mindset as to getting to a result, which is where we all need to be. The company in question is sadly not a member of mine, so I've never been able to query them as to what their specific reason has been. As I understand it, this company is one of, if not the largest writer of liability insurance to nonprofits. But if we take a look at a macro level, it's about risk and appetite and what you can afford as an insurance carrier. As more information comes to light, it's not wholly surprising that if less information was available to an insurance company prior, that perhaps rates were not as volatile as they have become. And perhaps renewals were occurring at a greater frequency because not all of the information was at hand. As more information comes to light, it's also not surprising that the premiums do begin to reflect the risk, and the non-renewals begin to reflect the appetite of what an insurer is able to do, willing to do. Now, I think that the captive insurance model, I think, is an important one here. And I know that we're going to talk about captive insurance at the next, but it is important because I do have to give Mike McGlaris a huge shout out here. What CIFSIC has done in the Crumbling Foundations area is just been tremendous. The Connecticut Supreme Court did find that coverage was not provided under the insurance contracts, and FEMA was showing no interest in getting involved in declaring the Crumbling Foundations a natural disaster and not going to release any funds. And CIFSIC did come in with the backing of the state and contributions from the insurance community and really put people back in their homes. I think that could be a component here. What it seems like what we're finding out, and I think we do need to gather a lot more information, is that the risk is becoming much more difficult to manage from the private insurance carrier's point of view. So creativity is going to have to come into play, and perhaps a flexible or a grouping of solutions are going to come in to make a suite to get to where we need to be. I think John Carl was 100% right. I cannot imagine the state reinstitutionalizing the folks who are being cared for by the nonprofit community. That's not going to happen. We're not going to be doing that. However, we do need to look at what are the key cost drivers here. So, Ben, you said it earlier. We have to look at litigation. We have to look at jury awards. We have to look at the clauses, the provisions in the contracts that the not-for-profits have with the state of Connecticut that require the nonprofits to indemnify the state when there is shared responsibility. That I have to imagine, again, not putting myself directly in the insurance company's shoes, that has to have a huge component. And I would not be surprised, I don't know for certain, that perhaps insurance companies did not know at some point in time earlier, that they were indemnifying, they were not only covering their client, but they were indemnifying the actions, the malfeasance of people who work for the state of Connecticut. That changes the risk profile completely. So there's a lot that needs to be considered. I'm saying I'm agreeing with Ben a lot. I also agree that since we have to take a look, in my view, at litigation and jury awards, we need to involve both defense counsel and plaintiff's counsel, both sides. And I think we have to involve the leadership of the Judiciary Committee, preferably even before we get to next session, so that we can start this conversation in earnest. So Representative Nuccio, that was a long-winded way. I hope that gave some information. I was not able to give you specific as to why that company dropped because they're not a member of mine and I don't know.
Thank you. Didn't really answer, but that's okay. And, unfortunately, one of the things that was said before here was that one of the non-for-profits were told basically as long as somebody offers, the one person offers, and I've heard that from the Insurance Association of Connecticut, as long as there's one provider that provides something, then, it's not an issue for all. Representative Wood, I'm thinking maybe one of the things we look at too is, was brought up about the case in California or whatever. I think one of the things we need to make sure of is that the property and casualty insurers here in the state of Connecticut are only creating pricing for events that happen in the state of Connecticut, right? We should not be paying because there was a massive claim in California or, a hurricane someplace else. And I think we have to make sure, and I don't know exactly how that works right now, but we should really be ensuring that we're limiting the rates based off of events that are happening here in the state of Connecticut. So if we have a bunch of people who don't have any claims and they're being dropped for no reason, or their insurance is doubling for no reason, I would be very, very curious as to how they're doing their rating and why that is. So I think that's maybe something for us to look at and think about also.
Thank you. George Bradner is going to weigh in.
Yeah, with the Connecticut Insurance Department, I oversee the Property Casualty Division, forms, rates, and rules. I can guarantee you that our rate system does only look at the experience of claims that are happening within the state of Connecticut. We do not, and we would not allow a company to be using rates or losses from another jurisdiction in order to set rates within this jurisdiction. And listening to the conversations around the table, Commissioner Mays and myself and the deputy have been having conversations trying to understand the issue with other states. This is not an issue that's isolated to the state of Connecticut. This is a countrywide issue that is happening in almost every jurisdiction. One of the things I have not heard, and maybe I just wasn't active listening, but one of the things that we've heard loud and clear that is a driver of, part of the issue that we're seeing is many states have changed the statute of limitation for children especially. And the limit, especially for children that are 0 to 18 years old, have the ability in many states to file a claim for up to 23 or 40 years. So this is an issue that when companies look at an exposure, they see a huge, what they call in the business, a tail, and they can't price that. The other issue you have, and Eric touched on it a little bit, is the structure of the policies. Many of these policies are occurrence policies. So when you have an occurrence policy, a claim can be filed going back 20, 30 years when the incident happened. So these are significant cost drivers. And then you get stacking of liability limits in some jurisdictions where over that course of those years, those limits can be added from that policy year over year over year. And so a company may have had a limit of $1 million or a $3 million limit or a $5 million limit, but then that is stacked over the course of 10 or 15 or 20 years. So now they're looking at these huge liability claims that they never even considered in their pricing. And I don't even know if you could price that. So, I mean, these are real issues. One of the things, they talked about when we've done research into this, underpriced, excess liability limits. The umbrella policies weren't priced adequately because of these issues that I've just mentioned. And also because of the issues of who's covered. It's, that's a huge issue, as Eric elaborated on earlier. Some of the stuff that they talked about that needs to be looked at too is strong risk management. Many times as you bring in new people into these organizations, there's a one-time background check. And they talk about understanding the history and potential risk associated with all individuals in the network, including family members and caseworkers, is important. And not just once. That continuous, reviewing and background checks is critical to making sure and the risk management of the system is done very well. And I think, and there's a cost associated with that. And but it's something that has to be understood in order, and part of the remedy, I think, as we discuss this. I do not want to tell, someone that's been abused by someone, and you get these predators and that's one of the things they find is you get a person they find an incident in one facility and the person came from another facility. And even if they didn't, if the person's been in that facility for 10 or 15 years, all of a sudden you have all these cases that suddenly start to come into the picture that this person had abused over a 15 or 20-year period. So this is what industry is looking at when they're trying to price an exposure. They don't see that they can. That's why they want to limit their the limits that they're providing. They probably would feel more comfortable with what we call a claims made type of policy, which your claims have to happen within that period of time that you have coverage. You can't go back into another period if you did not have that coverage in that period. That's a very easy interpretation of it. It's a very complex policy, but it's some of the stuff that has been used in professional liability in order to help companies provide coverage but contain claims cost.
So, George, question on that then. When we have the healthcare rate reviews, right, we know exactly what's driving the rate review. We see the claims experience, you see the medical trend, you know that. What, in your opinion, then, is causing these high changes, especially if we're just sticking to Connecticut and we haven't seen these large payouts and these big issues? What is driving these large price increases for the property and casualty side of the house? And when do we get to see that sort of detail? We see it regularly for healthcare.
Well, I think you have to, when you look at pricing, companies also look at what the potential risk is, that they have to understand that risk. And they do look at what their current risk is, what their current claims are. But there's this look at what do we have to consider in our pricing that we could be exposed to from a rating perspective, so we can make sure we're collecting the appropriate rate for the exposure. So, and I would beg to differ with you. I actually had a meeting with, the child care, healthcare, not healthcare, drawing the
Child care advocate?
No, not the healthcare advocate, the
No.
child advocate,
The child care advocate, the
child care advocate,
yes.
yes. And the day after I got off that phone call, the next day, guess what is in the news? A family not a foster care, but a child care facility had a case where a spouse's husband, her husband was abusing the children in the facility. And then just a week ago, I heard of $100 million case in the state of Connecticut in childcare. So we have had instances of this. These are childcare cases, but it points to the overall issue that when you're looking at foster care, childcare, this is what, that industry has to be looking at and understanding when it comes to the exposure.
Okay, so you're basically saying we have the same amount of rigor looking at claims and experience. Like, I'm not so sure about pricing for future events, because if they don't happen, you've overpriced, right? It's the risk that you've overpriced, but I guess that's different in the healthcare world. The healthcare world can't say, we know what medical trend is from the rate reviews. All of that gets reviewed very extensively at the rate review things. I don't think they're saying, but future, you could have more cancer or you could have this. So I think maybe I need to sit down with you and understand a little bit of the difference between how rate reviews
what I would recommend, I am not an actuary, though I might pretend to be one sometimes, but I think, actuarial pricing is an art. And, actuaries, I think it would be beneficial for the group to understand how pricing of this type of risk is done. And because, there are things that they look at. They do look at trend, but they also have to consider, potential risk. If they're going to be writing this class of business, how do they have to price it in order to make sure they can cover these losses?
Thank you. Would you be able to bring one of your actuaries in for a future meeting to go through that with us? Okay, wonderful. We have 2 more questions online, and then we're going to talk about our next meeting. Representative Meskers, followed by Cara Passero. Representative Meskers, you're on mute. All right, we'll go to Cara Passero and come back to Representative Meskers.
Thank you. I don't want to cut Representative Meskers in line, but I just want to sort of flag on behalf of the AG's office this question about state contracts and indemnifying and having contractors indemnify the state for actions of the state. There was a comment that nonprofits in our state contracts are indemnifying the malfeasance of the state. And I'm not sure that's accurate. I'm not a litigator. I'm not an insurance expert, but I'm going to track that down with the folks in my office. There isn't an indemnification clause for contractors to indemnify the state when the state is sued for actions of the contractors. And there was a pretty high profile case recently where, the connection was sued as well as the state, and the state is going to be making a settlement payment in addition to the connection. So that was something that the state, we were representing ourselves, and the state is impacted by that. And I would be curious sort of to follow up on the question that Senator or Representative Nuccio mentioned about sort of drilling down on the specific notices when a nonprofit is not going to be renewed or when the rates are going up. Do the insurers specifically outline why? And I'm sure that goes to their own risk management. Is it because there was a large claim in the previous year? Is it because of something in the state contract? I would just be interested in learning a little more about that. And I will certainly follow up with my folks and get clarity on my end.
Thank you, Cara. We'll have Allie reach out to you to we could present that in the next meeting or in a future one. Representative Meskers, you ready?
Have I figured it out? I think the answer is yes. Thank you, Representative Wood. I think Eric George made some valid points. I think there's a scope of issues we need to look at. From what I'm gathering directly and indirectly, there's a question of either, do we look at capping the liabilities? Do we look at some type of mandatory arbitration on awards? Do we look at what the state's responsibility is in terms of potential liability to the state for contractors? Are we treating this the same as other contractors, given the vital services? And I think going back, Representative Wood, to the work we've done on the insurance committee about the attempts at pooling of risk for healthcare, whether we need to consider the pooling of risk in this type of activity for the liability to make it insurable. And lastly, I was hearing from the insurance commissioner, then the question I have is, as legislation impacted the liability risk in Connecticut versus other states for this activity? Or are we on a similar basis? Or are there measures other states are already taking to curb the liability? Because we can't afford to have this industry fail. And I don't know whether our insurance commissioner or Eric could speak to the various ways to curb the liability or to pool the risk.
George or Eric, do you want to weigh in on that?
Want to go first, George?
I'll go first. It's a tough one. The state has sovereign immunity. All right. And so that's a huge issue for, the entities here do not have sovereign immunity when there's a case, so it's wide open. And to me, if you think about, this whole issue, again, I don't want to institutionalize any of these children. Uh, when the state did control it, they had that sovereign immunity to be taking care of the children. So there needs to be something that looks at how can you protect, from the liability threshold. But on the same hand, I'm also like a child that has been abused. How can you say you don't have a day in court to get remedy for being abused? And I do not want to take that away. But how, is there a way that there can be a backing mechanism that the state offers for this? It might be a way. A captive solution, I question if it's possible, because ultimately the entities that are in the captive have to fund it. And they also have to, so when they get one of these claims, $100 million claim, they have to be able to pay that claim. So, that gets at you have to have reinsurance, and that's going to be expensive to have, those vehicles that are backing the captive, so that if it does have a claim that ultimately does get into, a reinsurance type of situation. But, you're not getting away from the cost. The cost are the cost of what your risk are at the end of the day. And so that's my concern. CISIC has a flow of, money coming in through the, Crumbling Foundation Fund that we collect at the agency. And we, send the money off to the housing department, and they work with you to, distribute that. So that's your flow that you have coming in. But, you know, where's your flow coming from? And it's, can you be able to sustain 100+ million, or maybe if you have more than one in a year, that's a huge risk that you still have to account for.
Eric?
Ben.
I'll just also point out CIFSIC has a relatively flat cost for each claim and has been able to make an estimate of a relative amount of claims that could possibly exist in the state of Connecticut. And so I think when we think about CIFSIC as a model, we're thinking not so much about how it is as an insurance company, because it's very, very different for those reasons, but how the state could be involved and was involved in that case in helping get something started.
I want to synthesize something that Ben said and something that George said. So Ben referred to legislation that was introduced last year. I think it was Senate Bill 1322, that at one point in its initial phase did have a hold harmless, a liability insulation clause that didn't make it all the way through. Also, there are states, as Ben referred to earlier, Texas and Pennsylvania, which have some type of protective measures for not-for-profits providing these services. And George made the very, I think, astute point that everybody would agree with, is that you don't want to remove anybody's ability to seek a corrective action in court. If a child is abused, if an old elderly person is abused, you're not looking to take their ability away. However, I believe it was either Pennsylvania or Texas, they at least tried to, they'll have the blanket hold harmless. You were only able to achieve that hold harmless if you did a series of factors. You had proper background checks. You had all of these protective measures so that it wasn't just de facto, because we've learned that the nonprofit community has taken on the responsibilities of the state over decades because of the deinstitutionalization of certain folks. And prior to that, the state benefited from sovereign immunity. As those services transitioned from the state to the private sector, the major change is that there is no sovereign immunity. So now you have these services being provided by entities that are not protected. And there has been an increase in litigation. There has been an increase in jury awards. And all of this has led, or we should investigate, I would not be surprised if this has led in part to the situation that we're seeing right now. So I just wanted to take those two things and just kind of bring them together as we talk.
This has been fantastic. I've learned so much on this. We're gonna reach out to members of the Judiciary Committee and members of the trial lawyers and add them to this next week. As I said, Michael McGlaris and Brian O'Connor from CCM are going to be presenting. Everyone brought up some really great suggestions for future topics. I think having the AG's office present on the indemnification clause to make sure we understand that, have CID present on the actuary analysis of underwriting and risk. So I think for the next, 3 or 4 meetings, we have a great speaker schedule, but always open to adding new members. Please give us feedback if we are, not going in the right direction, or if you'd like to see something different. And we'll try to keep the meetings to an hour and 15 minutes. George?
I might be able to do something better because I might be able to get a company to come in and talk about what they've seen as the risks. That's a big writer in this arena, and also the pricing of it, the pricing implications, and how they go about pricing and what they consider. So I'll reach out to them and see if I can get them to come and speak with the group.
That'd be helpful. Any final comments? Thank you, everyone. We'll see you in 2 weeks.